Good morning to everyone. This is Stavros from Orbex head offices, and this is our daily market insights video for Tuesday, March 12. A very interesting day ahead today, with Britain's parliamentary vote gaining much attention. Ms. May and Mr. Juncker agreed on legally binding assurances that suggest the Irish backstop insurance won't trap the UK in a permanent customs union. That happened yesterday as an 11th hour change before the Commons vote later in the evening today. Now, Mr. Juncker said repeatedly that this is the last chance to get a deal through Parliament. There won't be a third chance. In case, of course, Ms. May's amended agreement won't pass through Parliament, as she needs at least 100 Tory MPs to back it, Commons will have two more votes on Wednesday and also on Thursday, where MPs will vote on either to leave the European Union without an agreement, so that would be a hard exit on the 29th of March, or in case they vote not to leave with a no deal, then on Thursday they will vote again on whether they should seek an extension from the European Union. Now, on the economic front, today we are expecting from the UK the manufacturing production as well as the GDP, which for some reason doesn't appear on the calendar, but it's okay. And so we are expecting as well as inflation CPI from the US. So we're going to dig into the pound a little bit and see what's happened. Now, yesterday, of course, we saw this this big rise on pound dollar, and that was because of the sort of good news that May is coming back to Parliament with an updated, upgraded, revised deal with legally binding arrangements with the EU, and that's the reason pound moved higher. Now, here we are actually trading in some sort of range. Okay, prices saw a false break over here, and following a bearish divergence signal here on the MACD, prices moved lower to the 38.2 Fibonacci retracement of the full wave from 123 to 133. Now, this level over here indicates that we are on a double wave over here. Okay, so we could see prices moving for a third wave up to 1.357. Of course, that will come in fruition if further signs are revealed. Down on the 4-hour chart, let me just delete those drawings. Yeah, down on the 4-hour chart, we do see prices moving in some sort of ascending channel, I would say. I've labeled this as an A, B, C, D, E, and E was down 1.3, as we have also recommended that this could happen last week, if you saw our video. And from here, prices moved up. We saw the rejection at this strong resistance level. Now, from here, where we can go? We can go a little bit lower and go into some sort of impulse wave up to that level. It could be a double wave to the upside, or you know, as well, we could have prices moving a little bit lower all the way down here. That is also a possibility. Now, what adds some sort of bullish bias here is the fact that the RSI, as well as the MACD histogram and the MACD lines, have all do all show us some sort of bullish bias on those charts, on the 4-hour chart, which means that we could be expecting prices to go lower indeed, maybe even up to this level, which is the descending trend line connecting the previous lows. But in case prices break below this trend line and this trend line, if of course this one were to occur, then we could be looking prices to move further lower. And further lower, that would be, down to this level, which also, if not mistaken, is the bottom of this range. Now I want to go quickly a little bit lower as well to see what is going on the lower charts, on the more noisy charts. So down on the 1 hour, so we talked about this sort of upside move, and we saw this corrective move as well from this level. Now we could look this corrective wave as an impulse to the downside, and we could see this as a correction, right? Now, what would that mean? That would mean that prices are indeed going to go lower. Now, although this scenario is not really likely, because also our levels here and our proportions to these waves don't really match. At the same time, we don't see any sort of bearish signals over here. So there is no divergence over here. It seems that markets are continuing with initial rejection down here. And at the same time, on the 1 hour, we see a small bullish divergence signal here that has helped actually prices break above to new highs. They broke above this level first, which is around 1.3075 or so. Then, of course, we broke this level at 131, and we broke above that level as well. Now, that means that prices could move in some sort of impulse wave over here. We could see a corrective move down to 131.5, and then we would be looking for prices to break this level, but we want to see that breaking quite with a momentum. Obviously, momentum is expected and volumes are expected to be very high today. We will see some moves on the manufacturing and also on the GDP figures, but those are expected to be overshadowed by the parliamentary vote later in the evening. Still, we don't know what time this is going to happen. There is going to be a lot of debate before the government releases the votes. I would suspect that, as previously occurred, that this is going to happen around, after 6-7 p.m. GMT time. Now, that is, of course, speaking, linking this event with the two previous votes in January and the other one that I don't quite remember when it was exactly. But the time was around 7 o'clock GMT London time, from what I recall. Now, from here, of course, we can see the markets are have broken here quite with a big wave to the upside without seeing much of a correction here. So I wouldn't be surprised if we see rejection over at this level, and then a continuation higher, where we could potentially reach the top line of this ascending channel, and then break above it, because this was our last wave to this channel pattern, which indicates that prices now could break above outside the channel. Thank you for watching again our daily video. I would recommend again just to keep a close eye on the pound today and the outcome of the vote. Feel free to subscribe to our channel to stay updated about the markets, and don't forget to visit our blog, where we cover the latest news, publish trading ideas, and provide all the necessary tools to save you responsible.